Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, April 25th, 5:34 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are downgrading this to caution after really a negative day in the market across the board. Leaders hit, indexes hit, all five breaking the 21. uh, Prompted in part by FRC Bank reporting last night. I mentioned how it was down 20% on last night's video, closed the day down 49%. So that bank is certainly looking at being taken over. The question is this going to be another mini contagion? The KRE index, which we've been cautioning, regional bank index, which we've been cautioning about staying away from, traded like it was today. But um, sometimes the markets tend to overreact. We'll see how it all plays out. And then after hours, we have a pretty decent bounce going on the back of strong earnings reports and reactions from Microsoft and Google. So we've taken back about zero point 0.4 of this 1.6% drop in the S&P 500 after hours. No clue if it holds overnight and into tomorrow. We'll see what plays out. Not a good reaction day from earnings this morning, and that carried through to the indexes. Of course, anytime you're messing with the financial sector, there tends to be an overreaction. Then again, was 2008 an overreaction? That was devastation, not an overreaction. Let's check over here at the trend gauge. Leaders got hit today. Uh, Probably about 20% of them worse than the market. Probably about 50% in line with the market. And the rest down slightly, but all in all, not a good day for leadership. Uh, we had been lamenting the lack of progress and why we've been showing this at neutral. And some stocks, some former leaders that have been taken off the list over the last 2 weeks broke down even more today. Some coming down to their 50-day moving average, some breaking their 50-day moving average. Let's take a look at short term very quickly. We got to bullish / uptrend on 4-3, but and we were lagging on small cap indexes. We finally got two closes above. All five of the indexes breaking below the 21 today with the big down day. Now we don't take the hour. We require two closes below the 21 on the indexes for this to get a downgrade, but it's certainly looking like we'll be going to neutral and possibly to bearish if if the short-term downtrend continues. Again, we've got uh, the two big, Microsoft and Google after hours today, as I mentioned. Tomorrow we've got Meta, Amazon on Thursday, and next week we have Apple. Microsoft and Google combined are 10% of the S&P 500, so that good reaction by them and the bounce coming off of that, because that extends over to other stocks too. Google and Microsoft, their cloud services apparently did pretty well. That carried over to Amazon. Amazon's up about 2.5% also. And then when the indexes climb, some of the leading stocks get lifted up as the index gets lifted up. So Apple's up also. Medium term, mid caps and small caps have been unable to get above their 50-day moving average. Actually, it was just small caps, but mid caps broke back below. Actually, no, it was mid and small. I apologize. The large cap have been above the 50-day moving average. So the mixed bag has us neutral there still neutral on long term also, although mid caps did break below their 200-day moving average today. So that went from green to neutral. Not a lot of good stuff to report here so far, except for the after hours bounce. Here are the final numbers. RG7, this is our 7 ETF growth composite. When this is lagging, this keeps us away from getting heavily invested in leading stocks, and it's done its job. We've poked and prodded a couple of them, never took more than a 6% position. on a couple, trim some of those today to either lock in some profits or as our latest pyramid buys went to break even or down a percent or two on those. We'll talk about that when we get to the tail of the tape. But the RG7 down 2.5%, S&P 500 gap down 0.4%, and there was just no buying whatsoever. It was a true trend down day. Look at a 5-minute chart, which we will momentarily, and you'll see exactly what we mean here. So uh, NASDAQ 100 even worse, down 1.9%, but up more after hours. Dow Jones Industrial Average down 1%, mid caps down 1.9, Russell 2000 down 2.4. Again, the banks hitting these two sectors. Global Diversified 60/40 bonds were the fear trade today, down 0.71%. GROTECTION in-house down 1.61%. It's Tuesday, so we'll have a Titan 25 Tuesday update. The market can't break down unless these stocks start breaking down. And so far, there's been a few hiccups, but just as many positive reports from earnings. We added a couple new columns to the spreadsheet to track exactly what's going on. So let's dive into what we're seeing here. The S&P 500, you can see very clearly on this. I'm going to blow this up a little bit, but very clearly you can see the break below the 21-day EMA, the break below this 3-week shelf that we've been building, this tight pattern. Let's go to a 30-minute chart. Where did we stop today? 4070. This corresponds to the 4070-ish lows back from early April. Let's go to a 60-minute chart. You can see those levels right here, how critical they were. And they were the lows of the new range that we established. Here was the follow-through day on March 29th. We had a second up day on a Thursday. This was a Wednesday. This was a Thursday. We had another follow-through day that Friday. We put in a short-term top. After that, consolidated sideways, made a higher high, but could not get above this higher high. 4113 had been holding any pullback over the last 2 weeks. We broke that today like it wasn't even there, down through 4086, the most recent low, but we did stop at this 4070 level. This corresponds to just below the 4100 level on the ES futures. So now what do we have left if we don't have support here and the bounce doesn't hold? The next level down is this right above 4,000. That's a pretty big, another 2% move down. And we got to hold there. Let's go back to the daily chart, the 4,000 level. Just a mess there. As you can see, we started climbing off the lows, but it was very choppy. Um, Distribution days bounced with accumulation days afterwards. Uh, First things first, we got to hold the 50-day moving average, which is at 40.34. So we've got some support there, and we're 2.8% above the 200-day moving average. As you know, the 200-day moving average, the market doesn't get into serious trouble unless you break back below that 200-day moving average. All bear markets occur under there. Uh, is it possible that, I mean, we've been operating under the theory that a lot of the negativity that happened with this last leg down and really last September and then the pullback in December was looking forward to the Fed starting to cut interest rates. But the question now is, if this area doesn't hold and our thesis is invalidated, how far down can we go? We've got our two key levels that uh, we'll be talking about, the 50-day moving average and then the 200-day moving average. But before we get extremely defensive, the downside's less than 3% from here. And as long as we're above there, we'll keep at the very least our some core exposure to the S&P 500 as rotation will take. If rotation is going to take place from growth to value and from sector to sector, it's going to take place within the S&P 500. That's why that's the measuring stick. But for now, if you look in context, this is a normal pullback, but the, the, a normal pullback considering that we've moved off of 38.08 up to 41.70. not that much of a pullback relative to that move, but we are breaking recent ranges and our 21-day short-term moving average. We don't want to give it all back very clearly, so that's why we stopped out on some things today and cut some hit our stop limits on some other things, and we'll go through that when we get to the tail of the tape. So there's the S&P 500. Next up, the NASDAQ 100. Worst today. This had been showing relative weakness. We've been talking about this for weeks. It broke clearly through its 21 and it's back into the base where this 313.68 breakout happened. Let's go to a 60-minute chart on this, that 310 level. This was, again, here's the follow through day, and we gave all that back. We haven't given it all back on the S&P 500, but we have on the NASDAQ 100. We closed that day, the follow through day, at 312.72. We closed at 310 today. We're back up to 313, up a full percent after hours now. So the Microsoft and Google conference calls must be going pretty well. The question is, will today's lows put a line in the sand? They become very critical after this initial reaction after hours. And then, of course, we got to get back above the 21 and undo this failed breakdown that we had today. That's, you got to get up to 314.29 on the NASDAQ 100. On the S&P 500, we got to get back above 40.95. I mentioned that I wanted to show you here. This is what a trend down day looks like. Just higher highs, higher lows, or sorry, lower lows, lower highs all day long. One pretty severe move down here after 1 o'clock. This was financials related, and then just selling off into the close. We'll see how far the bounce once again can take us tomorrow. The SPY's up almost a 0.5% after hours, up to 408. The 21 is 408.30 on the S&P. So maybe the big caps will come to the rescue, and then we've got two more of them today, as well as a bunch of other companies, big companies reporting all throughout the week. Will be 40% reporting this week by themselves. Will be, I believe, at 60% of the S&P reporting by the end of the week. Next up, Dow Jones Industrial Average, sitting on the 21-day EMA, showing relative strength. It has been since the NASDAQ has been showing relative weakness. That happens all the time. Here's where things got bad. You can see how tight that range was, very clearly broken today, and not bouncing after hours either. Mid caps are flat after hours, as this bounce is really just a big cap bounce due to Microsoft and Google. And IWM, last I looked, it was still down after hours. Now it's up 0.1% after hours, but again, very clearly you can see that breakthrough. So what you want to watch now is if we bounce back up near the 21, does this, what was support, turn into resistance and set up another leg lower on mid caps and small caps? And really, that's something that we need to be on watch for the S&P and the NASDAQ also. This 21, we spent 21 days above the 21. Will we get to today's day one below? Will it turn into resistance and then we turn back lower? That's what will be the number one thing that we'll be watching for tomorrow. Let's go to the dollar. Dollar was strong today. Interest rates dropping, money flows into the dollar in times of crisis. Is this another banking mini crisis? Well, we were up a 0.5% on the dollar today. Now we had some divergence there. Remember, gold and gold stocks acted well during the last time the banking crisis was happening, as it was a flight to safety. And even with the dollar up today, gold was up, reclaiming the 21-day moving average, and gold stocks up not quite as much, but regaining the 21-day moving average. So a safety trade in the face of uncertainty in the financial system also makes these lows, today's lows, critical to see if they're going to hold, and money is going to flow into gold and gold stocks. Silver down 0.39%, but did bounce off the 21-day moving average. So you also want to watch the lows of all three of those tickers today. The VIX, there's a volatility event, but everybody was talking about. We got it. We only went up to 20. 20 is kind of the dividing line between true fear and real panic when you get up into here. We held the 50-day moving average today, one closed below the declining 21, changing character though for the VIX, down 11% on the day. Let's get the bonds. Money flowed big time into bonds today. TLT up 1.47%. Uh, back approaching the top of the range, and leaving this week and a half consolidation in the dust. The broad bond index BND up 0.65%. The 10-year TNX down 3.4%. Very clear gap down, and it's just money flowing into bonds, pushing the prices up. That pushes the yield down. Here's the TYX, the 30-year, very clear gap down there too, not as bad as the 10-year sitting on the 200-day moving average. It was down 2%. Bitcoin, last time Bitcoin was a flight to safety also, it was up today 0.86%. So sometimes Bitcoin acts like a flight to safety. Sometimes it acts in line with as a risk on indicator along with the NASDAQ 100. Today, complete decoupling from the NASDAQ 100 as it was up 1% and is holding that 50-day moving average. It's still a failed breakdown. If you look at this 60-minute chart, this area above here, 30,000, but apparently we've stopped going down for now, and it was quite reasonable why we stopped going down. Look to the left here. That was the gap up that was never filled now. And so it's critical to see if 16 in Bitcoin futures can hold. So those are the tickers and the inter-asset correlation that we discuss in every video. Let's go to the tail of the tape. As we said, downgrade to neutral. First day of the bear case with a close below the 21-day moving average. Some news, consumer confidence was below expectations. That kind of hit the market when that came out at 10 o'clock. New home sales continue to be strong as people don't want to sell their existing homes because they've got low mortgages. So the only place for somebody that wants to move into a house is to go to new construction. They've got a big backlog. Commodities are falling, so their profit margins are increasing. They're reporting strong earnings and good stuff for ITB in the home sales as the sales continue strong, as I said. So we went from a 7-day consolidation on the day count down to day one down, first day below the 80 MA and the 21. We dropped 12 percentage points on the likelihood of a 25-point basis cut. So it went from 89 to 77. Expectations now negative with the break below the 21. Let's say neutral going into tomorrow with the after hours bounce. But again, today's lows are pretty critical. Broke the 21 support resistance level on the S&P, broke all of these support levels on the NASDAQ 100. But once again, we're back into this range after hours, trading at 313. So will this 313.68-ish area, which was the bottom of the support level, act as resistance on the way back up? Action, trend down all day, close at the lows. XLP and XLU, flight to safety, down but just a little bit. Dollar up strong, bond prices up strong, oils hit. So that one-day reprieve in oils, a bounce in oils didn't hold. SOX hit hard. KRE regional banks down 4.2%. GLD and GLD and GDX were up today. Cloud stocks got hit hard. They'll get a bounce after hours because Microsoft is a big component of IGB. But the cybersecurity stocks and the cloud stocks really hit hard today. PIC, that's base metals and transports, as UPS warned, we're down hard today. We're going to take a look at some of these charts as well as these that are part of the focus, and we'll review the charts that we sold today. Then we'll hit the Titan 25 and we'll be done. So we trimmed some UPRO at the break of the 21, locked in a small gain there, trimmed some ONON as our last buy went from positive to negative, trimmed some Lulu as our last buy went from positive to negative, trimmed some NVIDIA when it broke to 21, sold NRGU as our stop was hit, did offensive selling on SOX S. So that SOX S position was offsetting some of the NVIDIA position, which was up to 6%, but not making much progress. We were right on the line in the sand. So this offset some of the losses in NVIDIA, and IoT just didn't work as it undercut the 21 the day after we bought it. So bottom line, leaders hit as all indexes break to 21, after hours bounce, Microsoft and Google earnings. We'll see if that can stick into tomorrow. So a couple charts that we want to go through right now. We'll start with KRE. Uh, you can see the very, very clear gap down in new lows. Some of the banks are reporting okay earnings and they're being accepted. I think PACW reported after hours today, and it's up 16%. So can't paint them all with the same brush, but uh, as a broad sector, KRE is a mess. What else did we want to look at? IYT. We mentioned that transports were down as UPS warned. Not really a surprise that they warned, but that's ugly. Well, they didn't warn, they reported earnings and they were weak. Big volume, 300% volume down 10%. That carried through to FedEx, which is in the 21 over 21 list, but was only down 3%. However, it did close below the 21. Talked about FRC, NRGU stopped on that. IoT, uh, breaking the 21 the day after it was bought. This is just bad timing, a function of the markets. Uh, Sometimes, the M in market is the most important letter in CanSlim, and when it doesn't work, it doesn't work. NVIDIA breaking below the 21. We had talked several times about how relative strength was not keeping up with price across the semiconductors. NVIDIA holding up the best of the semiconductors, but I mean, that's the semiconductor index. That just looks terrible. As I said, we booked our gains in SOX S today, which offset uh, the NVIDIA pullback today. Let's see, Lulu still looks fine. But with the weak market today pulling back to the pivot, we sold a third of it. ON also still looks fine. Pull back to the 8. That's really about what we want. The best trends and the strongest stocks, they just ride the 8 EMA higher. Got back to the 8. Our last buy went negative. We took it off. I think that's it. We showed TLT, SOXS, SARK. We still own SARK. ARKK continues to look weak, making new recent lows. We're still holding SARK. So FRC we showed. So a couple of other earnings that we need to discuss. GE Healthcare. This was absolutely one of the leading stocks since being spun off by GE, down 8.4% today. It did hold the 50-day moving average. It bounced at the 10-week moving average. There's a little lesson in here. Stocks that are uptrending strongly, if you wait for a pullback to the 50-day moving average, you sometimes don't get it, but you do get a pullback to the 10-week. The reason for that is when you're uptrending, you normally close the week near a high. The 10-week moving average only takes the last 10 closes. So if you're closing high in the week, when you're pulling back, you're going to hit the 10-week EMA before you're going to hit the 50-day simple moving average. So very often, and O'Neill was a weekly chart guy, so he knew this. But if you're locked into daily charts, you won't get that. But with GE Healthcare, you did get a bounce at the 50-day today, and in leading stocks, a 50-day bounce is a valid entry point under O'Neill's methodology. So GE Healthcare bouncing. Next up, FedEx, we already looked at that. Microsoft. So tough day today, down 2.25%. After hours, up 6.5% to 293. So it's taken out these recent highs. Will the gap stand? That's the question tomorrow. And then Google, GOOGL, after hours, it is up 2%. So not as strong as it was, and that's not even going to take it back to the top of today's range. So Microsoft holding up better than Google after hours. CMG also beat earnings. It is up 8% after hours. That's blasting to not quite to all-time highs. It's at 1920 after hours. Those highs were made back in 2021. Congrats to the burrito bowl eaters. And finally, Enphase, not so good here, down 16% after hours. That's going to take solar stocks with it. tomorrow. Now let's go to where is it? It is, bear with me for 1 second, please. So here's the Titan 25. We added an earnings report column. So how are they reacting since their earnings report? 9 of them have yet to report. We've got 4 that are reporting next week. So far, we've had 2 good reactions. NVIDIA, that's pulled back now, and Procter and Gamble. We've got 17 different sectors here, uh, and this is we classify them relative to their 21-day moving average and their 50-day moving average, with different ranges. Different colors represent different ranges. This is a relative strength column. So how is it doing relative to the market? And obviously you want to see more green than anything on here. Anything that's changed substantially from last week, we put a entry in that column when it happens. So for the most part, this still is looking okay. Um, we take it day by day, but the deterioration will show here as well as on the indexes for confirmation. But what will stick out is which of these sectors are holding up better. And these are just titans. You've got the 12 that are not highlighted in yellow make up 31% of the S&P. It goes up to 39% of the S&P if you include those in yellow. The NASDAQ 100, these 12 represent 60% of the index. In the Dow, these 13 represent 64% of the indexes. So they get hit. The market's going to get hit. The Dow is benefiting from Microsoft after hours. Um, the NASDAQ 100 benefiting from Microsoft and Google, as is the S&P 500, not quite to the extent. So next up, the big ones are Meta tomorrow, T-Mobile also tomorrow, Exxon later in the week, Amgen later in the week, Boeing tomorrow, Caterpillar later in the week, and then next week, Apple. And that'll give us only Berkshire Hathaway on 5/8 will be the last of them, and then everybody will have reported. We can gauge the reaction to them as well as the gauge of the overall markets. But these 25 are what are holding up the big cap indexes right now. One break today, we had actually 3 breaks below the 21 EMA, and we'll see how things play out the rest of the week as earnings are reported and the reaction to the earnings. We're actually just barely below the 21 on the Dow, but that'll take it back above it tomorrow with the Microsoft reaction. It's up 0.25% after hours. So remember, it's not how much you make in the markets, it's how much of that you can keep. That's why we show this chart in every video, trying to stay out of trouble from these massive losses. A healthy market will carry the portfolio back higher as we take positions in leading stocks and in the indexes, as long as they're trending above their moving averages. And with that, I will wrap up today, Tuesday, April 24th. This is Don Vandenbord with Revere Asset. Telling it like it is, not such a good day, but there is possibly some light at the end of the tunnel with the reaction of Microsoft and Google because of their big weights. Let's hope that light isn't a freight train. Thanks for listening and have a good day.